Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Las Vegas at the Global EQ Derivatives Conference. Joining me on set, we have my colleague, Sean Feeney. He's a Senior Managing Director with U.S. Options at Nasdaq, and we're going to take a look at the buy-side's involvement with the volatility market. Sean, it's great to have you join me on Trade Talks, and this has been a big topic of conversation at EQD, just exactly how the buy-side is engaging with the volatility markets.
Absolutely. So the buy-side itself, we could kind of split them into a couple different segments. You have the real money, who are the pensions and trusts, endowments, and retirement systems. Then you have the systematic vol traders, volatility arb shops, relative value managers, and the like. And it's been amazing for us at Nasdaq to be able to engage with this audience on just a different level. We typically focus on the liquidity providers and the banks and the retail firms who are sending order flow into our 6 options exchanges. And just having the opportunity to engage with a different audience about some alternative topics, alternative risk premia topics, which is really kind of core to my past, and it's just wonderful to be able to get involved.
And what are some of the key themes and trends that you're hearing from the conference?
Sure, I think there's a lot of justification as to the dampening of the volatility landscape, holistically. So, finding reasoning behind, whether it be central bank tightening or, just the various liquidity landscapes, like just the concept of institutional vol selling and what that does to a market maker, and having a market maker who might absorb some of that risk, and then having to trade around it in more of a long gamma scenario, and what that's actually done to the overall equity volatility as well as the index volatility, and just being able to have those conversations and get on a deeper level with the institutional community as far as like skew and what it's done over the past, say, about year or so, and just kind of like the relative importance of gamma trading versus the short vega trade, which has been kind of it's been proliferated by this the overlay community.
I would say, based on the content that we've had on Trade Talks, it's been quite encouraging to see how the buy side is looking at liquidity.
Absolutely.
I thought that was interesting.
No, it's great, because I sat in on a panel before, which was amazing in terms of being able to replicate the private equity market by using public securities, right? So using various somewhat levered yet risk mitigated instances inside of index options in order to replicate private equity returns and risk profiles. And that's really what this whole conference is about, and finding these alternative risk premia solutions, especially for these real money firms who are going to allocate based on a range of different strategies appropriately in order to mitigate their risk, and yet still be able to receive the returns that their investors not only desire but require.
All right, Sean, thank you so much for joining me on Trade Talks, and thanks for joining me throughout the day at the EQ Derivatives Conference. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.